For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today, talking about I made a mistake. Yesterday, as some traders caught, I took a trade on gold right prior to the Philly Index news release, which is a major red flag news event on the calendar. And unbeknownst to me, I didn't actually notice that on the schedule. When I first had glanced at the calendar for the week, I mistakenly saw the Philly Fed Manufacturing Index as part of Wednesday's scheduled news. I just inherently saw Friday as blank and didn't see anything as Thursday, and did not realize that there was news in the morning on Thursday in that U.S. session. Now, there are two things to take away from that. One is that I got lucky, because obviously the trade played out in its fruition, but also that the process works. Now, I talked earlier in the video yesterday about the consolidation was between 50 and 75, and you'll notice again as we got closer, and I talk about 3 session setups, allowing the day to set up, trading mainly the U.S. session. So we had U.S. session high and low. They made a lower peak formation high, and we went into the 50 pip box consolidation. In the gap time heading into the Europe-London window, we make a lower high of the Asian day, and we trade down into the low of the day, but we stay outside of the previous day's low. So we have a creeping trend down with 3 pushes into the low of the current day, and I talked about when a market breaks through a low, money automatically comes into the market on the other side of that screen or on that high low. So we have a creeping trend, 3 pushes into the low of the previous day at the quarter level, which I talked earlier about, is that one of those levels may end up being a level where the trade comes off of. So we had a short squeeze that came out of the Europe-London window after the 3-hour high-low, but also just more importantly, again, understanding that's the levels. We're underneath of 50. The peak formations are going down to the quarter level. If your thesis is that the market is going up, obviously savvy traders were able to get potentially a low fill in the bottom of that box after they trigger breakouts, hit the stops, and reverse in that London window. But again, objectively identifying getting filled below 50 and having a 1-bar stop if you were taking this trade. Now, coming back to the U.S. window, some traders also asked, well, I thought you said this was day 2. How can it be day 2? It's day 3. So we have day 1 on Monday breaking through the low of the previous week. So we've taken out the previous week's low on Monday, our day 1. But on Wednesday, we get a peak formation reset. Now, I've talked about this before, that you can get a peak formation sometimes on a Wednesday, and then Wednesday, Thursday, Friday becomes the new day 1, day 2, day 3 in the 3-day cycle. So you have to be able to differentiate. Monday is the start of the week. You can come to the screen with a fresh, clean slate. I know there's lots of traders who want to align the 4-hour, the daily, the 1 hour, the 15-minute, the 30-minute, the 30-second, right down to whatever they're getting in on, as opposed to coming to the screen and looking for setups at the higher low of the day in those session timing windows. But we have a peak formation reset on the Wednesday. That's the peak formation reset. How do we know that? Because we're trading on Thursday. We're trading on Thursday, and they broke through Tuesday's low, which was also the low of the week. I've talked about the initial balance. Monday, Tuesday typically will form one of the extremes 80% of the time that will hold for the remaining part of the week. And you'll find that on many weeks, when Monday closes near the extreme, it can also indicate the directional bias for the rest of the week. Okay, so that's not necessarily a hard and fast rule, but there are, especially if we're into a 3-week cycle, which is obviously a trend. So anyways, coming back to the U.S. session, we're on day 2 now in a breakdown after a peak formation, starting our 3-day cycle again. So the market obviously didn't false break reverse. We have a breakdown, a breakthrough, a breakout into a new 100 pip box, and the peak formation high, that lower peak formation high, is our new high of the U.S. window. We have our peak formation low, our peak formation high, and then our consolidation in a 50 pip box. So as the market trades lower and gives the short squeeze, we come into the U.S. session at the high of the day, but also into the breakout from day 1. So again, talking about day 2 reversal traders in the London session have had a successful reversal trade in a day 2 reversal situation at the low of the day. Now we're now at the high of the day in the U.S. window. So we come to the screen, we have our U.S. session about to open. Our U.S. session is about to open. We have a high bull locked in place. And again, first hour makes our high and our low. So let's go and look at the first hour, because if there can be a first hour trade, as I've said before, and we saw this on Monday this week. We go back and look at Monday. We have our engulfment. We're in the lower portion of the box below 50. So if our thesis is long, we're thinking we want to be going long at or better than 50. We have an engulfment just in the last 15 minutes prior to the U.S. session opening. There's our low bear. So we have a low and they go back into it and then they engulf it. There's our low bear candle. And then they proceed to go 1 push, 2 push, 3 pushes into the low. As that 15-minute bar is ending, they break structure. They come down 1, 2, 3. We get our pin hammer for the explosive 100 pip stop hunt through all the lower hanging fruit. So this is again an example of a first hour trade. The low was locked in. They 3 pushes into the low, break structure. That's a short squeeze setup. Same thesis applies. We have 3 levels of rise from our Europe London window. 1, 2, 3. They go 25 pips above our double zero box, which was going into the breakdown from the previous day's breakout. We have our high bull in place, and we have volume now trading above the double zero box. So in the first 15 minutes, the market comes up 1, 2, 3 in the 4th, 5th, and 6th minute, putting a peak formation high in place. This little pump in our first 15 minutes is our peak formation high. They come down and put in a low. Then they trade back into the low and go vertical in the next 15-minute bar. So this vertical move, as you've heard me repeat over and over again, that is the beginning of my setup, that vertical move. That vertical move is the pump into the high of the day, into our lower pin high. So the first mouse gets stopped out, but that vertical move after our break in structure is what I need to get into the market. Otherwise, you're just chasing the moves. We need the vertical move, whether you're at the bottom or the top. So the previous day we had the short squeeze on the Monday. They go vertical, put a low bear in place, and then they push into it 3 times. If we don't have a short squeeze or a vertical move, there's no trade setup. So they go vertical and engulf. This is where I made my mistake. I entered in on the engulfment 1 minute prior to the news. So I'm in the market. That's my starter. I'm in. I've got my stop. And to my surprise, obviously had a vertical move in the next minute right away. At which point I realized, went back and checked, saw the news, and at that point was at break even on the starter. And then when the market popped up 1, 2, 3, and I talk about this, the breakout level, this breakout level right here, this bar that breaks out, that space in the breakout after the bear candle is where I will add all my positions if I'm adding more. We have our first target's been cleared out. The pop-up was our opportunity to add positions with a 50 pip target. The market came down, cleared out those orders. The 1, 2, 3, the trade's over. We're now into the new hour. 15 minutes in the new hour down. That's a dead giveaway. That's the false move at the new hour. Now we're out until the equity market opens. At that point, I was done for the night anyways. So, again, got lucky, but also the process. I'm at the high of the day. The setup was there. They broke structure. We entered in at the high. We added positions, managed our risk on all of them, took profits, finished the trade. So again, you make mistakes occasionally. Sometimes you're rewarded for bad behavior, but the process allowed me to be in a good trade setup, regardless of the instrument. High of the day can be any instrument. High of the day, low of the day. 3 sessions, 100 pip boxes, 50s double zeros, 1 bar stops, and profit targets put in place. Keep it simple, traders. I'll try not make that mistake again. Sometimes you just get foggy-eyed and you don't want to make that mistake, especially around news. Luckily, it wasn't a major mover last night. I think that blow-off just trapped higher level longs and again capitulated. And immediately once they're caught, they're not coming back. Keep it simple, traders. Enjoy your weekend. Finish the week off strong. And may the markets go with you.